It is time for some new durable goods data. Rick Santelli is standing by at the CME in Chicago. And Rick, take it away.
Yes, actually, we have durable goods. We have some trade numbers. You know, the June advanced trade, we don't cover it all the time because it's an advanced number. But at $98.2 billion, of course, with a minus sign, it is well off its March all-time back to 1989 extremes, which was $125 billion deficit. So definitely making progress there. On the retail inventories, they were up 2%, double expectations. That's a really good thing, and that's a June number. Wholesale inventories, a preliminary number, up 1.9. That's about 0.4 better than expected. Both these, of course, sequentially are gains with respect to the rearview mirror. And finally, on the June preliminary read on durable goods, expecting down 4 to 5/10. It's up 1.9, up 1.9. That is definitely better than expected. It's actually the second best number of the year outside of January, when we're up 3.1. So some very good news there. And, of course, the rest of the data sets that are embedded in this haven't quite shown up yet. I do see capital orders, the shipments, non-defense ex-aircraft, up double expectations, up 0.7. And here we go, up 0.5 on one of my favorites, capital good orders, non-defense ex-air. That's over double the expectations, and that really has been trending quite well, especially on a year-over-year basis. It's a proxy for capital spending. And on that durable goods order, up nearly 2%. If you strip out transportation, it drops dramatically to only up 0.3. Now, 0.3 is still better than expectations, but it shows the big effects of transportation with respect to boosting the headline durable goods number. We see all interest rates prior to that number were actually lower. The 2-year note now is just a smidge in negative price territory with a slightly higher yield. And that really has been the dynamic, Becky, the flattening yield curve, the inverted yield curve, whether it's 2s to 10s or you look at 3 months to 10s. And, of course, the big issue today is going to be that press conference. And I know you have Dr. Judy Shelton on in a bit. Definitely. She's been all over paying interest on reserves, paying interest on the reverse repo facility, and, of course, just generally servicing the debt. All of those are going to get quite costly, and I think that's a very interesting area to pay attention to as we get ready to watch the Federal Reserve hike interest rates at 2 Eastern. Becky, back to you.
Big day. Rick, thank you. Steve Leisman joins us right now. He has more on this. Steve, looking at these numbers, what does it tell you about the picture of the economy right now? Pretty good one.
It's hard to think that business is really freaked out at the moment by the outlook for the economy when new orders for durable goods are up by 1.9%. And hats off to my colleague and associate in Chicago by zeroing in on that business investment proxy. New orders for capital goods ex-aircraft up 0.5%. A caveat in here, which is that these are not inflation-adjusted numbers. It's probably about flat relative to if you factor in inflation on that number. But they're not giving it up here, Becky, and that's a really important aspect to what may or may not be happening in the economy. Remember, the first quarter GDP number, despite being negative because of inventories and trade, was positive when you look at both business investment and consumer spending. With shipments up, let me just get that shipments number, probably a negative number when you factor in inflation, up 0.3%. But they're not giving it up. And yesterday we had a surprise in the Richmond Fed Index, which I remember an economist from Richmond argued to me that it's more, it does better tracking the national economy than the Philly Fed does. That was a surprise yesterday. So it's hard to find, Becky. Again, we have these cross currents in the economy, this concern about the recession, but also an industry that's trying to catch up from where it was from the pandemic. So these two forces are playing out on each other. And today it seems like the forces of catch up, the forces of both computers is really interesting to me, up higher given what Microsoft said. So I think that's an important aspect to what we're watching here, which is that you can't just count the economy down right here. There are negative forces out there. There's a slowdown happening, but there's also catch up and still the rebound from the pandemic happening at the same time.